Hey folks, doing a sound check. A little less than a minute, folks. We'll get started. Welcome everyone to the Kindle Report. It is 9 p.m. Eastern Time, so as our usual time, we'll get a lot to go through tonight. And actually, I say a lot, really a couple subjects that maybe it will get a little more involved, but I'm going to keep this broadcast tonight very short. I guess if you look at how we started yesterday, we started in a weaker note. Looked like, I'm surprised the trolls weren't out. Bob was wrong. Bob was right. Markets hit pretty much a S2, R2 level on the S&P and almost printed a R3 on the NASDAQ. So we continue to see these markets claw back after some of the weakness last week and over the last couple of weeks. So all of a sudden we're getting back in this mode. The title that I put on tonight's video is Our New Highs Next. And the patterns that are setting up aren't super bullish yet on the intermediate, but they are set up on a short term that we're likely to see some more upside in the markets. We look back yesterday, we had S&P up 0.3, NASDAQ up 0.8, and Russell up 0.1. I still need that Russell to, bring it in and start to participate a little heavier here. Yesterday, capacity utilization came in weaker than a lot expected. Industrial production missed completely, down 1.3. But of course, what's the favorite excuse? Well, in this case, they used a hurricane and computer chips, right? So that was the problem there. The NAHB index on housing came in at 80, much better than a lot of folks were looking at. That's the National Association of Home Builders. Not really a material report, but I think it does set up one of the dialogues I want to talk about tonight is that the housing sector is trying to make a bit of a comeback here, even though seasonally that would be a little bit out of touch. There's somewhat of an emergency, especially on the east, any place that it freezes, let's put it that way. If you're going to get a house started, you need to break ground in October, and November's too late in a lot of areas in the country. There's a lot of growth out in the west here, so that's still going to be going on all winter long. So maybe the seasonal tendencies won't play into a lot of this, but I think folks are rushing to get permits and get things started. So the report tomorrow is expected to show, I think, on housing about 1.6 million units. I think that's going to beat. Last couple of times we continue to see the housing coming back a bit, I'd say over the last 2 months, and that looks like that's going to be a continuing trend as we go forward. The permits, I expect maybe they will actually come in way better just for this fact that I'm talking about. There are areas where we're going to see weather come into play, then there may be extra permits there. It'd be interesting to look at where the permits are being issued and stuff. I'll see if I can find that, maybe bring that up tomorrow night. But for the most part, that's going to be all of the economic reports coming out. We do have more earnings coming out. Earnings today were interesting. You had Disney miss and down 3%, and then you saw some other reports come in, and that was the optimism that continues to show up in the market as all of the, I guess, basic reports coming in from most of these companies are showing up better than expected. This was kind of played up. This earnings season was played up to be, I would call it somewhat of maybe apprehensive is the way it was presented coming into it, that this might be the time where things are going to start to falter. I think it's going to be next month. And I've been setting up and talking to you about the economy hitting the wall. Maybe this capacity utilization, the industrial production, maybe we'll see some manufacturing stuff coming out. All of this, I think, is starting to show some general weakness starting to show up. And like I said, for the most part, it's some seasonality issues that are out there. I don't have a lot of notes for tonight, but I did see a couple of things that you folks were asking about, and I think I will cover that to kind of fill in some space, because one of the things I see, Gary Peters, you were asking about some of the, I think the China situation, and I think the Evergrande, I forget how many days, I have this wrong, but I think it's 3 or 4 days from now that their 30-day payment grace period will be out, and then we may have an outright default after that. So that may come into play. As far as some of these other issues, I don't have super good sources for this type of information. What I've been able to kind of garner out of, some of the mainstream and filtering through stories and trying to find these things is it looks like, there's probably some other risk. The mainline China talking points are saying, hey, this is not going to be a contagion. This is a one-off situation, and that's what it's going to be with the Evergrande. We'll see, right? As far as that goes, we also did see, some of the GDP numbers and some of the China numbers come in a lot weaker. So there's some things going on this planet, and for whatever reason, we are hitting the wall on this reopen trade. We're hitting the wall on a lot of situations, and I think it has, everything to do with every channel there is, no matter what it is, if you have to move product, right? So we know all about all of the shipping constraints, the trucking, the ships, everything. Supply chain is just completely screwed up, and you're seeing some rhetoric out of the Brandon administration talking about this is going to be a continuing situation. And, obviously, right, it's, most of the government folks that are quoting anything are talking about what we already know that's happening. But I think that there's still a lot of general underlying strength in this market. And when I go into the details here in a minute, we'll go through all of this stuff. Yeah, I was running tight on getting ready for the show tonight. So some of this stuff I'm just going to bring up live for you, and we'll dig into some of the database. Let's go ahead and start to look at the WaveTech database here. Just bring up a couple things here. We did see the database end up at 48.08%. And a couple metrics that I talk a lot about. Let me zoom in on this. A lot of the metrics that I talk about here really is set up for a couple metrics that we watch. 42%, 48%. We're there now. We're not really stalling. We did see 957 new buy signals and 197 sell signals. So all the ratios are still somewhat getting traction here. And this is a good sign on a short-term basis, just suggesting there's a fair amount of support that's coming in. And you'll see when I go into some of the metrics and some of the charts on the indices, how they're set up, and we're ways away from having any real risk come back in to this market. I'm not sure that we've averted all of the intermediate risks that's out there, but we definitely have stabilized here. So this scenario is going to have to unfold a bit longer than what we're seeing right now. As I mentioned before, our database on an intermediate level, I'll put that on screen so you can see it, that actually is at the 40.46 number, just below 42. It's not materially below it. We did see some traction last week on the intermediate, so we're continuing to see some of these intermediate trends unfold here. And, there's not, like I said, we're in this place at 40, 42%, where there's an uptrend that's being maintained. It's not signaling right at the moment any kind of mass liquidation or anything like that happening. In fact, I set up on Sunday's video, I talked about the whole situation of that we probably get one of these, what I call an echo rebound in the database, where it goes maybe back into maybe 50 percentile, something like that. Then it rolls back. We'll have to watch this closely, but there's still a lot of patterns that are somewhat I wouldn't call them outright failures, but they're not in trend mode anymore. And who knows? We're going to need, if things are going to come around, maybe Apple coming around. So in tomorrow night's video, I'll do a few hand-picked stocks. I'll go through some of those. I haven't done any stocks for probably a couple of weeks. There's not going to be a live stream Wednesday during the markets. That's off the table. So we'll go ahead and we'll just kind of look at those stocks on Wednesday night. And so that couple of nights from now, I'll dig into some of these trends that might be driving these markets a bit higher. So we'll start and get into talking about these indexes. And I think the thing that I'm looking at here that is somewhat, I guess, positive is the upward slope, and especially what's happened on the short term. So I just talked about the database. We're back to 48%. Over 42 tells you that there's enough traction in the database, because typically it only gets up around between 70 and 75% bullish. So it's in the mode. There's enough symbols in the database that are suggesting that there's an underlying support in the markets with an upward bias. That's confirmed by what I'm going to show you here on the chart itself. So we look at the S&P, and all of a sudden, look at the acceleration that's happening on these PPMs. PPM1's plus 0.31. PPM2 is not quite in trend mode yet, but it's at 0.13. So we're definitely seeing this angle of attack start to push these markets higher. There were a couple of things that I discussed the other night, and let me just bring up let's bring up the market grid here. So yesterday I talked about there was a possibility of an S2 R2 and at least an S2 R1, and what we saw was just a slight on the futures. This is yesterday's numbers we're looking at now. We got down to S2 was 44.34 print low, 44.36, 79 on the upside, R1 76. So R1 S2 was the number. We did get a little better, and when we go to the cash, you'll see that. But we go to today's numbers, we're looking at probably so far low 44.71, S1 64, R1 44.90. Look at the numbers that are starting to come back into play here. All of a sudden, we're looking at 45.05, 45.20, 45.33, and that starts to get into the next level breakout mode. And the next other number I want to point out here are some of these upward projections on the Fibonacci. And we had 44.38. We're obviously through that. 45.06, 45.48. So it's very possible we're going to see this 45 handle reached in the next couple of days. I don't see it rolling over, not with PPM set like this, not with the angle of attack at the level that it is. We could print back toward this 10-period moving average, but I think the 40 is going to be the dominant one in this pattern. 44.26 is rock solid there. And what's going to happen in the next two sessions, we're going to get a crossover of the 10 and 40-day moving average. Typically, what that does suggest is that we will see some consolidation before we'll see any further advance in the prices. So we're about 2 more days. We're probably going to print up toward these upper end of the range. I don't see the market grid changing a lot. The upper end of the range, 45.05, 45.20. We're probably going to be looking at those kind of numbers in the next couple of days. A breakdown would take a move down below the 10-period moving average, that 44.64 number. Don't see that happening. Let's go over to the SPX and look at the S&P cash. And you'll see this is actually a much more bullish pattern that's unfolding. And what we're seeing here is we're almost up to the same numbers. I'm going to show you these these objectives. 44.57, we're obviously behind, above that. First numbers in play, 45.25, 45.67. That puts us up at the ATH and getting ready to print up to that, toward those numbers. But the first barrier is going to be this 45.25 level. That's 50 handles. I don't know what would be out there at the moment economically or anything that would trigger a move like that. But right now we're just seeing that the patterns are setting up that way. So in the next couple of days, we're probably going to see the 45 handle, the extreme's probably going to be around this level at 45.10. On the downside here, that 40 period moving average, now that we're above it, we got 2 days above that, that is going to suggest that we're going to see it remain above this 44.36 is going to be your rock solid support in this pattern. So let's take a look at the market grid real quick for the cash tomorrow. Looking at probably an S1. Here we go again. R1 is 44.96. That's up 10 handles. Look for a possibility of an R2, S1, R2, which puts us into that 45 handle. So next market we'll look at is NASDAQ. As I mentioned in yesterday, and you'll see here, I was talking about getting up toward that R2, 15,240. The high, this is yesterday's numbers here now. The high was 297. R3 was 295, so we basically printed an R3. If we look on the downside, low 15,038, basically an S2 R3. So the NASDAQ had a pretty big day, and that was impressive, I think, from a standpoint of being able to get that kind of traction. Probably having Apple catch a bid today with the new Mac and some new product announcements brought in some extra vig into the market. And as mentioned last night, this is starting to show there's a fair amount of vig or momentum in this market, and it's accelerating. So I don't see this going away, and it looks like the NASDAQ will continue to be the leader. So let's go to the Russell. Russell is continuing to stay above that 2250, 55 number, 52. Those are the good support numbers there. We had a low of 2255 yesterday. This is the cash Russell daily. And so we do have some objectives. I mentioned a couple times on the upside here. We're looking at 2326. That's about a 50 handle move. That's a pretty decent move on a $2,200 index. So I think we're going to see this thing continue to move up. PPM's accelerating, PPM 1, 2, and 3 all in position to continue this slight upward trend. And in fact, because of this elongated flat period we had, it looks to me that this is the first time we're likely to get a trend that maybe will get to where I've been talking about and get us to the point of being able to see that some leadership come back into the Russell. So let's go over to the spread so I can just show you what that looks like. It continues to pull back because, as I mentioned, the Russell is only up 0.1, NAS up 0.8, so they're losing ground. I'm just looking for this thing to turn back up. I suspect, just looking at the pattern in the Russell, that it will play a little catch up tomorrow and be able to maybe get this pattern to turn back up. But for now, just looking for this long base period to stay intact and not start to punch out any lower numbers in this spread. Yeah, so come up, this will be mid-session here. Come up, and I'm going to do, we'll take a quick look at the 10-year crude oil, gold, and then we'll do Bitcoin again. it still remains at a very critical level. I want to make sure I'm covering that. But the patterns that are unfolding on overall on these indexes, just to summarize this, are short-term positive, intermediate term is still setting up some reasonable patterns to say there's a bias to the upside. Our database confirms that both on the short-term level being long 48%, and then our intermediate still being right at 40.5% is enough to keep these trends somewhat alive here and keep from any, I would call, any major disasters and surprises coming out of the market. Typically, those things come out of a sub 30% bullish range, and it's just a matter of the setups. And the setups right now, as I said, just still have that upward slope. So let's go into the 10-year next. So the 10-year was able to uptick again. This is the daily chart. And we're continuing to see these upward Fibonacci projections up here, and they are suggesting 1.73, 1.83, 1.9. And this is the daily. I'm going to show you the weekly here before we move on. But I talked about this a couple of days ago. We had those cycle lows come in, which is a low in yield and a high in the bond prices. And we're going to need just a little bit more strength. We need PPM 1 to click back through its first, second derivatives. But overall, we have a plus 0.66, 0.68, and 0.58. All three of these averages are in trend mode. So this will suggest that we're going to stay within the grid. And we look at the grid for tomorrow, we're looking at probably a one potential getting back to around 159 to 160, and the probabilities on the downside are about 156 would be the likely range. And we have this 10-period moving average coming through right at that 156 level, so that should be enough to hold this. We go to the weekly, and this pattern just remains really bullish. And one of the things I've been talking about over the last couple weeks, actually, as we look at this chart, is the PPM2 has been negative for some time. It is just went, it's still at 0.01. So we're looking at an interesting scenario from that standpoint, is that we're finally got positive on PPM2, which tells us the intermediate trend is starting to turn up, which will represent higher yields up to that 170. And I've talked about this before, 175, that was the old high back in March. That's going to be the level to keep an eye on. And at that stage, maybe there's some challenges to some of these intermediate trends and other things that could come into play on the stock indexes. But for now, this is being somewhat ignored, I think, or it's acceptable, however you want to look at it. Most market participants are kind of going, okay, these are stable, even though they're higher than they were, there's no big deal here, nothing to see. And of course, we know there's potential for a lot to see, and the inflation is not going to go away. All the factors that are driving, the underlying factors in this market, are going to continue to drive this market higher. And I don't want to go through it at this point in time, but if you folks would remind me maybe tomorrow night, if those of you who've been around the channel for a while will remember that I discussed something that I think is really important to understand. I remember telling you, it was last summer, I don't know, maybe a year ago, maybe a little bit more than that, that we talked about the princes of the yen scenario, which is not princes, but princes, and that scenario that America was becoming the Japan, and that we were going to see the markets and everything start to inflate, and that the stock market would be the place to protect yourself, and specifically the S&P would be the place to protect yourself against the inflation that is coming. And I just want to put that out there. I know there's a bunch of you that are on the stream every night, so keep me honest and remind me to go into that scenario, because I still believe that's the case. And I wish I had about an hour and a half just to sit around and talk about some of this stuff that's going on, because there are some in-depth conversations that could be had around this situation. So anyway, I just want to put that out there. You guys, folks, will remind me, and we'll go forward with that. But the weekly on this 10-year is just telling us that we're going higher. We're going to head to the 180. What is this? 186 level. When we get above that level, then we're going to be talking about 2% more. And I see a lot of guys, even with Bill Gross, the former bond king, right? I saw him, the headline in the story, I didn't even read the story, that he thought interest rates are going to 2%. I believe they will. And I've talked to you even further that potentially they could get to 275 and maybe eventually retest the taper, the old taper tantrum highs at around 3.25. So there's a lot to talk about. Like I said, I'm trying to find a spot where I could spend the time to get these ideas and thoughts out there and do a much longer podcast of what I'm going to do tonight. I'm already 25 minutes in, so I'm supposed to be almost done, and I'm not. So let me move on here. The thing that we're going to go to crude oil next. And crude just got an insane uptrend that is ongoing. And there's 3 objectives now. And now we're starting to play with some of the other objectives. And 88.49 is the next objective here. And we look at, this is a weekly chart. So we did print a high of 83.18. That was enough to wake up the algos and the news lines to talk about the 83 print. But we've obviously backed off of there and we're seeing this thing start to come into some reasonable support ranges for this week already. So I'm going to say that we're probably 80.79 is going to be around the bottom, no more than down to S2 79.74 should be the bottom of this market. But the trends here are really powerful, and we're going to stay, the probabilities of staying within this market grid are probably close to 100%. So we're not going to see the broad ranges 85.70 to 78.70. So we're going to stay in there, but I think the 79.74 S2 weekly would be about the bottom. R2 83.72, we came just shy of printing that. I'm not sure that we'll see much more of a range of what we've already seen in one day, and so we'll continue to watch this pattern. But the upward slope, the trend is real, and it's not going away. So we're going to see higher energy prices. So I did see, I think it was, I don't go to the Zero Hedge very often. Something triggered me, and I looked through some of their stories, and they were talking about how the going green has triggered, a boom in fossil fuels, and it's exactly what's happened, right? And even the whole electric car thing is triggering that, because if you're going to charge your electric car, how are you going to charge it? Where are you going to get the electricity? And as I've said before, the capacity of electricity to try to fuel, 40 million electric cars with electricity is going to be it's going to take a while to get there. So we'll continue to watch this story. But this crude oil is definitely in big way. I still think we're going to see 90 or 100 or better. Okay. So I'm going to stick with the weekly chart on gold. Yeah, I just see a question. I'm going to interact just a little bit here. 2% rates negatively affect crude oil producers. Yeah, I don't think the rates are going to affect this crude oil situation. As I've been saying, just to finish off crude oil, is that what we're really seeing here is a disruption of supply more so than anything else. I saw another article that oil company executives, I mean, sometimes you try to, we live in this altered reality, and oil company CEOs are having, well, I'm trying to get the right word here, but they're having difficulty expanding the, the oil patch and creating more oil. They don't feel like it's morally sound. So now they've got climate change guys running the oil companies. So how bizarre is that? I guess that's how you position it. So they're just, if they believe them, what they said, sometimes I'm as good as the rest of everyone else as I read these headlines and I maybe get through the first paragraph before I'm choking on it. So I did see this, and I think it's interesting if that's the case. So on the gold. The gold pattern I've talked about, I mean, it's crazy. I thought we were all set, ready to go, bust through 1800. Everything was about to really accelerate, and then we fell back again. And now here we are, stuck back in 1760, mid 1700s again. But we look at this chart. Let me go full screen so you can see this a bit better. When we look at this chart, though, we dipped down, but we've still got a great pattern here on an intermediate basis, and the PPMs are slightly negative. We have some overhead resistance, 1795. We got rejected off 200-day moving average. We saw that happen, and then we just printed down into that 1750 again. So we're back into the range. Looked like we were ready to break. It wasn't time. So here's what's going to happen. If we stay in this range, approximately, I'm estimating about 2 weeks, we're going to see PPM1 start to bleed off all the downside momentum, and then it's going to be set for us to get back above 1795, back above 1800, and start to move into some of these other objectives that we're seeing up here, 1918, some of the numbers that I talked to you folks about a couple of weeks ago. It's going to be critical in this pattern, though, to hang in and keep closes above 1750. I'll hold that number down if we get into a scary place. But this looks to me like more of the same, and we go all the way back to, back to June on this chart. And this is, we've just been in a sideways range. So expect more frustration. It doesn't look like there's very much opportunity at the moment, but watch this 1795, 1800 level. All right, so let's go to the final market tonight is going to be Bitcoin. I did tweet, if you guys didn't notice, I did put out last night's weekly numbers on the Bitcoin so that you would have those. I know that they don't update until after midnight, so I did get them out last night, probably an hour after they came out. I put them out on Twitter. I'll try to do that when certain things happen. It's just a matter of paying attention. But here's what's going on here with Bitcoin starting to lose some of its upward momentum, but there's still a pretty nice slope here. I don't see us actually at the moment. This is the weekly numbers. 57.6 is probably going to be about the bottom end of the range. And right now we've seen a high of 62,653, probably in R1, 64,233. That's going to be a pretty good number. And I think I looked this up. We're right at the stage where we're likely to get an acceleration. The PPM's up 2.93, 3.05, 1.46. The probabilities of a big decline here are virtually zero. And so what we're likely to see, we could see a retracement back to 51, but I don't see that really happening. 51.2 would be the 10-period moving average, but we know Bitcoin can get pretty volatile, so there's certainly a possibility there. But this pattern is very, very bullish, and we continue to be above that pivot number that I talked to you about, is at 60,612 number. That looks like we're going to stay above that. In last night's close, which was a weekly close, the close was 62,110. So guess what? We did not get the close over that 62,612. And that was the breakout point. So we'll have to look to this week to see if we can get that close over it this week. So pretty dang close, but not close enough. So we managed to avoid the breakout signal for now. But I still think the most likely pattern here will be maybe an S1, S2 on the downside. So this is a weekly projection. So somewhere between 59,988 and 57,613 probably be the lower end. On the upside, 64,233 is probably an R1. Is about all you're going to get there. Yeah, so anyway, folks, appreciate you watching the show. I went longer than I want. I kind of miss myself the old 12, 15-minute videos. The problem is they took 3 hours to produce. I know that sounds silly, but anyone that's ever done that knows it takes a long time to produce these things. So as always, just looking at a couple comments here before I leave. Yeah, so OPEC, Russia, they caused the 2020 oil disaster. Yeah. Yeah, so listen, as far as just in summary of tonight, indexes are still in this minor uptrend on a short-term basis. They're in a good place to move higher. The commodities are actually been firming up. I didn't go through a whole barrage of those. And tomorrow night, I'll try to get through the my transportation index I built in the smart transportation. Somebody was asking about that. Looks like you're a user. Just if you would, just send an email to us, and we'll try to get you set up so you can even build that yourself or do something like that. So let us know, or I'll make sure maybe a thread goes out that shows those symbols that I put into that. Anyway, thanks again for watching, folks. We'll be back tomorrow at the same time. So look forward to talking to you then. Have a great evening and have a good day trading tomorrow. See you tomorrow night, folks.